Hello everybody, I'm John, this is JP Strategic Investments, and today we're going to talk about the lawsuit against Rocket Companies and Dan Gilbert. Now, for any of you experienced investors, you know that lawsuits like this tend to happen fairly often, and usually nothing comes out of these. But the reason I wanted to address this lawsuit is because it talks about something a little bit more specific with Dan Gilbert's $500 million sale, and I just wanted to address this for any newer investors just to give you guys kind of some insights into what happens with these lawsuits and how they usually work. Now, before we get too far into the lawsuit, I do want to clarify that this is actually the same lawsuit that was kind of hinted at a few months ago. Some of you guys may remember there were press releases about Rocket Companies being under investigation for misleading statements and things like that. This is actually the same lawsuit. It was just under the investigation and kind of information stage at that point, and now it's actually being brought as a formal complaint. Now, for any of you newer investors out there, these types of lawsuits are fairly common. A lot of times you'll have investors who buy into a stock, the stock tanks, and instead of thinking that they did something wrong, they misjudged the stock or the company, they'll blame the company for misleading them into buying the stock in hopes that it would go up when the stock was actually always going to go down. Now, as I said before, most of the time these don't really turn into anything. Usually it's the investors just made a mistake, they don't really have a good case, and the lawyers are more than willing to take their money to try and get some money from the company, but a lot of times nothing really happens. That being said though, there are some times where investors do have a good case and the company does end up having to pay some sort of settlement. I'm sure most of you guys wouldn't be surprised to know that sometimes some companies tend to bend or break the rules, and sometimes they get caught. So with that in mind, let's take a look at the case against Rocket and see if they have a good argument. Now, this case actually is broken down into, I think, 6 or 7 different points that they give here. So I'm going to go through each one of these points, kind of give my thoughts on it, whether or not I think it's a valid point or not. So if we look here, it says that the complaint alleges that throughout the class period, which is the period that the lawsuit is looking at, the defendants, which are in this case Rocket Companies and Dan Gilbert and maybe some of the executives within the company, made materially false and misleading statements and or failed to disclose that, and then this is where we get into the points here. So the first one here states that Rocket Companies' gain on sales margins were contracting at the highest rate in 2 years as a result of increased competition among mortgage lenders, an unfavorable shift toward the lower margin partner network operating segment, and compression in the price spread between the primary and secondary mortgage markets. Now with this one, while these things did happen, I wouldn't say that they didn't actually disclose those. I mean, I think it's fairly obvious over the past 2-3 quarters that they've been heavily pushing this partner network. They've been trying to grow it through a variety of different networks, through realtor.com, through brokers, things like that, in an effort to gain market share. I mean, that's what Rocket is about. They've made that very clear from the beginning that their long-term goal is to gain market share, and if they have to reduce margins in the short term to do that, they will. So I wouldn't say there's really a valid point with this one. Now, the next one here says Rocket Companies was engaged in a price war and battle for market share with its primary competitors in the wholesale market, which was further compressing margins in Rocket Companies' partner network segment. Now, again, I think the same thing with the last point. We already knew that they were kind of in this price war there's a huge rivalry with UWMC. I think this is common knowledge with Rocket stock. So again, don't think it's a very good point on the second one there. Let's see, the third one. The adverse trends identified above were accelerating, and as a result, Rocket Companies' gain on sales margins were on track to plummet at least 140 basis points in the first 6 months of 2021. This one I have an issue with because hindsight is 2020, right? I mean, you could look back now at the mortgage industry, where rates are, where Rocket Companies was, where UWMC was, and say, yeah, I think they were on track to plummet at least 140 basis points. But looking back at the time that they were in then, I don't think they absolutely knew that. I don't think it was 100% obvious, because if it was, we would have seen the stock pretty much start to drop from then. We wouldn't see this big drop after earnings when all of a sudden this information came out. If it was common knowledge, if it was so obvious, we wouldn't have seen this huge drop. You see when the stock reported earnings, when the company reported earnings, we saw this, 10-12% drop. And this wasn't just like uneducated retail investors that were pushing the stock down. This happened after hours, minutes after the earnings report was released. This is, big institutions moving their money around. And if it was so obvious that rates were going to drop, rates were going to increase and that their margins were going to compress, I don't think we would have seen this. So that's my issue with that is, you can always look back and say, oh yeah, it was so obvious. But at the time when they're giving this guidance and when they're making these predictions, I don't think it's, 100% obvious. So let's get into the fourth one here. As a result of the favorable market conditions that had preceded the class period and allowed rocket companies to achieve historically high gain on sales margins had vanished, as rocket companies' gain on sales margin had returned to levels not seen since the first quarter of 2019. So that one, I'm not sure what it's really about. I think they're just stating a fact. They're stating that because of the things, because of points 1, 2, and 3, this happened. I don't think they're trying to make an argument there. I wouldn't disagree that did happen. But I don't think that necessarily proves anything. So let's take a look at number 5 here. It says, rather than remaining elevated due to surging demand, rocket companies' wide gain on sales margin had fallen materially below its pre-pandemic averages. Again, this one, I think they're just making a point here, stating that 1, 2, and 3 led to this. I don't think they're trying to make an argument, so nothing really substantial there. And then the last one, number 6, it says, consequently, the defendants, again, rocket companies, positive statements about rocket companies' business, operations, and prospects were materially misleading and or lacked a reasonable basis. Now, this is the main one here. This is really what it all depends on. Basically, what they're saying here is that because of what we've laid out before, rocket companies, or the executives in rocket companies that were making the statements in the earnings reports and giving guidance and things like that, if they had known all of that, or with the information that they had, they should have known that margins were likely to compress, and therefore they should have given more guidance that those margins were going to compress. And because they didn't do that, or because they said that they were going to continue to remain strong, then that means they were misleading investors. And this is the thing I think that's going to be the hardest thing for these lawyers to prove, and that is intent, right? Because to prove that somebody was trying to be misleading, you have to prove that they weren't just wrong, right? And so, so if Rocket's giving guidance, right? If Julie and Jay and Dan Gilbert, if they're, figuring out what they think the margins are going to look like and things like that, and they give guidance and they're wrong, that doesn't mean they broke the law. That doesn't mean they were misleading. What has to happen here, what they have to prove, is that they knew that margins were going to come down significantly, but told shareholders that essentially they weren't, right? Or didn't do their duty in telling them how significantly they were going to come down. So you have to basically prove that they should have known this, and that's very hard to do. It's kind of very murky unless you can find like internal emails saying like, hey guys, margins are going to come down, but then in the earnings reports they're not talking about that. They're not letting investors know that. So that I think is very hard to prove. Now, the one thing that worries me, and this is where we get into the block sale and Dan Gilbert selling the $500 million in shares, that is a case that I think they could make. And so if we get into that here, so you can see here it says that the lawsuit is accusing the firm and its executives of giving misleading guidance that the suit says artificially boosted Rocket's stock price in the weeks before founder Dan Gilbert sold $500 million in stock to finance his major philanthropic effort, if I said that right, effort in the city's neighborhood. So what they're saying here now is that the guidance that they gave artificially raised the stock price so that Dan Gilbert could sell at a higher price before the stock dropped off. What they're trying to do here, though, is they're trying to say that the guidance artificially boosted the stock price and allowed him to sell at a higher price, because that way it could kick money back to the shareholders. If Dan Gilbert just violated some insider trading rules, they could get in trouble for it. Rocket could get in trouble for it. Dan Gilbert could get in trouble for it. But it wouldn't kind of fit the needs of this lawsuit, right? So what they're trying to do is kind of grab onto this thing that could be a good argument and twist it a little bit in a way that it suits the needs of whatever shareholders are putting forth this lawsuit. So I don't know if that's going to work out for them. Now, I definitely think, as I said before, at the end of Q1, he sold, March 28th or March 29th. If we look back at the stock price, you guys probably remember that big block sale from Morgan Stanley, I believe it was announced. I think I made a video on this, and the stock jumped all the way up to $27 a share. Now, the thing is, though, is Rocket gave guidance. They reported their earnings and they gave their guidance way back here on like February 25th or something like that, right? And that's when we had this huge jump, short squeeze situation, everything like that. I don't think it had, I think it was more of a short squeeze scenario than really reacting to the earnings. Then you had the stock really dive all the way back down to almost where it was. Now, obviously, it's still well above the $20 level that it was at, so you could say that it's still inflated a little bit from those earnings, but it's really hard to make the argument that this inflation allowed Dan Gilbert to sell, and Dan Gilbert selling hurt the stock, right? Because even after Dan Gilbert sold, it stayed up there, and so it's really hard to, it's kind of convoluted. Again, as I said before, I think you could definitely make the argument that Dan Gilbert, when he sold those shares, had material information. So again, when you talk about insider trading rules, basically one of the major rules about insider trading, insiders, have certain blackout periods where they can and can't sell. But the vast majority of times they can make sales, they just have to disclose it within 2 days with a Form 4. What you can't do, though, is you can't make a trade when you know certain information that is considered information that could move the stock price that hasn't been made public yet, right? And so if they knew, which I think you could make the argument that they knew, you'd have to go back and look at earnings calls and things like that. But if they knew by the end of the first quarter there that margins were starting to compress, that is information proven here, obviously, that could move the stock price significantly to the downside. And so if Dan Gilbert is selling, knowing that information, and that information hasn't been made public yet, I think that's an argument that could be made that he maybe violated some insider trading rules. Now, again, I'm not accusing him of that. I'm not saying that that's what he did. I'm just saying this is an argument that could be made. So I want to make that very clear. But as far as this lawsuit goes, in general, the actual lawsuit, I don't know if it really has any merit. I don't think that you could really make a good argument there. And so as far as that, I don't think Rocket will have to pay any settlement out here. But I hope this was helpful. I hope kind of this broad kind of walkthrough and different points like that, I hope that really helped you guys understand what's going on with this lawsuit and what maybe could and couldn't happen. If you have any questions, have any comments, thought there was something I missed, definitely let me know in the comments below. Other than that, I will see you guys next time and have a great day.